let's start with the market rebound. Another big point swing for the Dow, which has had a roller coaster week, sinking 890 points on Monday, down 478 on Tuesday, losing 83 on Wednesday, falling 537 points on Thursday before climbing, more than 670 points today. It looked like we were close to, 674. Let's say. I think it's settled. Let's bring in Citi U.S. equity strategist Scott Cronert and Interactive Brokers chief strategist Steve Sosnick. Guys, happy Friday. Scott, is today's bounce convincing? Can people buy next week?
Well, I think it certainly sets the tone here. Earlier this week on Monday, we suggested 5,500 as a pretty good risk reward line in the sand, if you will. And what has happened is that you've gone to classic oversold conditions, even though our sentiment indicators are still slightly in euphoria. But all told, what I think you've done in a very short order is washed out a lot of the euphoria around the mega cap growth space, which is corrected quite significantly more so than the index. What this does is begin to set up for a view where we think as we go forward, we're going to continue to contend with concerns regarding economic softening, but this mega cap growth cohort can begin to step back in a growth as defensive sort of play.
Oh, okay. Well, Steve, what about the bad, frankly, consumer confidence numbers out of Michigan this morning? Is the market still sensitive to bad news, or is it a good sign that people seem to have shrugged that one off?
Hi, John. I guess it is a good sign that they were able to shrug it off. I think today it was more about, as Scott mentioned, bouncing off some oversold conditions. It was a day that we didn't have any tariff news, which I think the market was kind of thankful to not have to reckon with that sort of stuff today. We also did sort of potentially dodge a government shutdown. So those are all reasons why it made sense to be on a good footing. I was, though, a little surprised that the rally just sort of shrugged off those terrible consumer confidence numbers. They have been a huge player in why we've been seeing some rocky markets in here. A lot of this stuff is spilling back to the consumer. But today, that was not about it. You also, remember, had a Friday expiration week of weekly options, and that can also turbocharge a rally once it gets going.
Okay. Now, Scott, you mentioned big tech. NVIDIA actually had a good week overall, unlike the major indices, but it's also got a big week next week with GTC. How influential do you think NVIDIA is going to be with its news next week?
So, John, our concern with NVIDIA has been simply that it's been relying on a beat and raise dynamic with estimates for the past 6 months and has been laboring along that, right? But what you've done with this recent stock price setback, where you've sold the stock off, over 20% from peak to recent trough, is you begin to take some of that expectation out. So you get yourself to a point now where a reconfirmation that underlying trends are in place might just be sufficient to give the stock some renewed energy, at least on the short term. Okay.
So, Steve, taking a step back and looking at what we've been through this week, really this year, I guess, or at least since February 19th, let's say this month, should retail investors adjust their eagerness to take on risk chasing returns?
I think this was a wake-up call for a lot of investors, and I think this, I think the simplest way to answer that question is give a rubric for individual investors to do it for themselves, and that is: were you freaked out over the last couple of weeks? Were you freaked out this week? If so, you're carrying too much risk. If you saw this as sort of a normal correction within the course of a longer bull market and a setback, but maybe a temporary setback in your plans, well, then your risk tolerance is different. And I think that's really the way you have to go about things. This doesn't mean necessarily head for the hills. On the other hand, it's also important to remember that some of the biggest rallies occur during downward markets. Bear market rallies are actually the biggest, but we're not in a bear market as of now. But that's the gut check you need to do. And I think if you're blindly buying stuff just because it's down, that's a mistake. If you're buying stuff because you say, all right, it's on sale, I liked it at the first price, all the fundamentals still add up, I can get a good stock at a discount, then you want to be going in, but don't overshoot your risk tolerance.